So, but you need to do the WAP, so the Wealth Action Plan, because that literally helps you set up all this stuff.
Do you believe any of this shit that you talk about?
Yeah.
Yeah, because I'm starting to get really sick of your shit. I've been sitting here for the whole year, and all you do is talk shit. You're down 60% with your holders. I think you know what you are? I think you're a car salesman, piece of shit, snake oil salesman. You haven't done shit all year. Do something.
Wait, who?
All you done is lost money all year. You're pretty pathetic, buddy.
Isaac, wow.
Yeah, listen to this. And I want all your members to listen to this. He's a fucking con artist. He can't do shit. He can't do nothing. You're a waste of time. You're a waste of money.
Hey, Isaac. Isaac,
everybody can go. Siam.
you're wasting
You're a
your
waste of
time,
fucking Norway.
Isaac.
Whoa. Wait, let's all chill out, guys. So, let's get to the root of this. So, Isaac, I thought you've always been on the trading pubs, etc. You've always seemed pretty cool.
Yeah, exactly. I've been here, and I can talk, and I can say you're full of shit.
Whoo, things got a bit spicy there. Okay, so for context, I held a live session sometime last week. It was almost 3 hours long because there was a lot of content to cover. And unfortunately, there was a chap who had recently lost everything from a bad ETH trade. Again, pinning the blame on me, etc. And some of the... I must have said something very early on in the session, because it was literally 10 minutes into the session, where I must have triggered him. And then he started going on, for a good 10 minutes, swearing at me, swearing at everyone else, etc. And I think it was because of the first thing which I was talking about, which is why I've lost a fortune this year, and I'm not really fussed. So what I thought I would do, because there's great learning in everything in Discord, great learning in terms of Discord and happiness, and what I want to do now is take that 2.5 hour, 3 hour long live session and condense all of the key learnings I was trying to teach into a concise manner. Now, I have no idea how long this will take. Could be 20 minutes, could be more. But it should be a lot quicker because there's just me to camera, no questions and whatnot. So without further ado, I want to talk about these things here. Why I've lost a fortune and not really fussed. First, fast versus slow feedback systems. Trading versus portfolio management. There is a difference. And then coincidence versus correlation versus causation. So yeah. Let's get in it. Get in. Oh, I can't bloody talk. Music, go. Righty tighty, let's do this. So I have a whole bunch of points here. Don't think you know what I'm about to say by reading these points. Just wait, because there's a lot of meat that I want to put on these bones. So basically, to start off with, I have had probably the worst trading year I've ever had this year, by a country mile. And the first couple of points is based on this bit: why I've lost a fortune and not really fussed. And the first point is that I'm not fussed because my past returns have been mega. Now, that's because this is not my first rodeo. I have been around the market. I've been a currency trader for at least 18 years now. I've been in crypto really since 2012, but I didn't really get heavy into it until 2016. And my past returns have been mega. Now, some people may say, well, anyone got crazy returns in past bull markets. Well, yeah, potentially, but my trading and my performance in the past bull markets have far surpassed just hodling Bitcoin or Ether. So although I've had a very bad year, I'm not too fussed because it's not my first rodeo, and this is my third bear market. Now, I went through the 2013, 14, 15 bull and bear market. Now, admittedly, I didn't have much money in the game back then. That was in my hating period of crypto. I had, I don't know, £5,000 in it. and I watched it go from 1,200 back down to 200, and I was like, ha, told you Bitcoin would fall, or would fail, it's a Ponzi, all that sort of stuff. So now this is my third bear market. Now the reason I am pissed off with myself, because this is my third bear market, I should know better. And so being about 60% down this year is unacceptable for me. So I'm my own worst berater. So yeah, I'm more than happy to share with the whole world that I'm 60% down this year. I've lost a couple of million, I think, overall. So thereabouts. But another reason why I'm not fussed is because I know what happens next. Now, key word here is no. I know. Well, I don't know. I am 99% confident. I think I know what will happen, but ultimately, the thing with trading and the markets is that you never 100% know anything. So I am personally certain of what will happen, but it doesn't mean it's fact. It doesn't mean it will happen. But yeah, that's another thing. So I'm fairly certain, in terms of confidence level, that crypto is a technology. Ultimately, it's not about individual projects or DAOs or NFTs or whatever. It's the technology. We saw the tech bubble crash in 2000, 2001, and the internet didn't go away because it was a network effect technology that was the underlying thing which was booming. And crypto is the fastest growing network effect system ever. It's only taken 12 years to hit 1 billion users. It took the internet 23 years to hit 1 billion users. So over the next 3 years, this bear market will be a little stain in our past, in the rearview mirror. And all it takes, and from experience, is that even 3 months worth of bull market tends to just completely wipe all of the previous losses of the previous bear market. So I'm pretty chilled. Now, I have lost a lot, as I said, but this is what happens at scale. So someone said, "Oh, you've lost a fortune, you've lost millions, blah blah blah. You are utterly shit, blah blah blah." Well, here's the thing: I've never ever said I'm some whiz kid trader. All I know is I'm in the top 1% of traders. Now, we can go through the statistics of that, and I'm easily the top 1% in terms of what I've done. But that still doesn't mean much. All you have to do, if you can consistently break even in trading, year after year, just break even, you are already in the top 1%, simply because so many people fail. If you can make even a teeny weeny profit, you're the top 0.1% of traders. So, but the thing is, when you have scale, when you have some businesses, or you have a pot, or you run a fund, or let's say you're the founder of a particular crypto project, you're going to have scale, you're going to have bigger numbers. So if you do have a 60% drawdown or whatever, yeah, you're just going to lose a lot more than someone that has a 10 grand account that has a 60% drawdown. So you have to understand scale. Now, also, when you're looking at scale, you could say, take Chamath Palihapitiya, right? If you look at his performance growth compared to Warren Buffett, it is just ridiculous. So let's say Warren Buffett, in terms of the race to the first billion, etc. Let's say Warren Buffett was like this. Chamath Palihapitiya is like this. In almost every metric, Chamath is absolutely dominating Buffett in terms of, if wealth generation was the race here. So I personally believe he's one of the best investors out there at the moment. He's got a very good head on him. He understands the world. He understands all sorts of stuff. However, if you were to look at him through, let's say, a bozo's eyes, and go, "Oh, Chamath, I think he's launched 10 SPACs, so special purpose acquisition companies. He's invested in 6 companies via the SPACs. I think he's winding down 4 of them. And of those 6, I think he's something like 70% down." So if you look at this, he has literally lost hundreds of millions, hundreds of M's of dollars, let's just say. So there are countless amounts of investors that have invested in these SPACs, and because on average he's 70% down, he's lost hundreds of millions. So you could look at those just big numbers, go, "Oh my god, this person is an idiot. Don't give this person money. that person doesn't know how to deploy capital or protect it, yada yada yada. And this has happened despite him forecasting a downturn this year. So, but it's just that is at scale. And the thing is, when you get into business and trading, you'll soon realize that hit rate is completely irrelevant. It really is. Just look at most VC firms. What they'll do is they'll invest in 100 businesses, knowing that nearly all of them will go bust. And all they're looking for is one Uber, one Airbnb, one Google, one Apple. They're really just spreading their bets across freaking everything within whatever their niche is, just waiting or hoping or trying to nurture that next unicorn, the next tech unicorn. And it's the same with trading to a degree, but I don't want to go off topic. So yeah, point 3, a lot, scale happens. And let's fast forward a year or two, and let's say I've made £10 million in a few months from a nice bull market or a nice trade or whatever. It doesn't mean I'm Billy Big Balls. It doesn't mean I'm Gordon Gecko. It just means I may have grown the pot 100, 200%. Okay, which is great, but you could have the same results trading a 10 grand account. So you've got to be wary of scale. Now, the other reason I'm really not too fussed, other than the reason I've said this before, is because I have made it my mission over the last decade to resilience my life. So what I say by resilience or resiliencing your life is by what it means. Orchestrating your life setup so that bad things don't knock you off for good. They don't wipe you out. One of the key or the gross errors you can do with trading or in life in general is to make a mistake that wipes you out for good. So for example, the most extreme version of this in terms of life is doing a thing, let's say something illegal, which lands you in jail with a lifetime sentence. That would be a catastrophic failure. You screwed up once and you're paying for that for the rest of your life. If you then go on the other end of the spectrum, I don't know, you drop your favorite pen and it breaks on the floor. Oh, whoop-de-doo, you've lost a pen. It's, there's different scales. Now, the way how I've resilienced my lifestyle is that, and I've explained this in previous videos, is that over the last decade, I've always aimed to have 3 business groups in my life. So you have your lifestyle business lifestyle group, you have your growth group, and then you have your enabler group. So let's just go backwards actually, first of all. Before we get even there, I need to actually go backwards first of all, because you have sort of a ladder, sort of a rite of passage in terms of the wealth generation journey. I don't know how many steps there are, but the first one is getting a job, because you need income, you need to pay your bills, etc. Then you need to increase your level in your job, so you get a pay rise, get a better position, get a managerial position, etc., get a district or area position, and then and a job is a means to an end, because then eventually you may want to become a one-man or one-woman band, right? So you take all of the skills and knowledge and know-how and maybe contact or whatever that you learn in your various businesses over, I don't know, this could be 1 to 10 years, let's just say. And then eventually you're going to be a one-man band. Then hopefully you're going to be a multiple-man band, as in you're running a very small business with a few staff, etc. And the key thing with business and wealth, this is a group smile, with wealth generation, is that it's all about arbitraging capital and also time. So for example, if you're working a job, you're, let's say, putting 40 hours per week into your role, okay? But that's not going into your own boat, it's going to someone else's boat. If you're a one-man band, all of a sudden those 40 hours a week are going into your own boat. That's great. Now let's say you have a very small business and you've got 3 staff, including yourself, and all of you are doing 40 hours a week, let's say. So all of a sudden there are now 160 hours per week going into your own vessel, and this is your vessel, it's your boat that's moving forwards, then eventually you can grow further, etc. So let's say you're to the point now you're running a proper performance business, etc., and you've got, let's say, 100 staff, or 100, I can't even do maths, 100 times 40 is 4,000, isn't it? 100 times 40 is, yeah, 4. So then all of a sudden you've now got 4,000 hours per week of work going into your vessel. So obviously a performance business is just going to be doing a lot more business and revenue than a small one-man band. But here's the thing, there is a set sort of path or growth that I have come to, just based on empirical sort of questioning of various businesses, that if you can put at least 50,000 hours of work into a vessel, if it's yourself, that will lead you into basically a retired, semi or fully retired position where you have lots of cash, you can chill out for a bit, or even fully retire. 50,000 hours. Now, you're never going to do that in the job. One-man band, you're never going to do that. 50,000, divide that by 24. Not that you're going to work 24 hours. That's 2,000 days. Divided by 365. Yeah, it's not going to work. However, let's just say you're doing 160 hours a week with a small business. 50,000, divide that by 160. That's only 312.5 weeks. Divide that by 52, you're looking at 6 years. So all of a sudden you can get into a very good situation where you could sell your business, let's say, in 6 years, and then as you go, and then eventually when you get into these areas, you can start to getting a bit sexy, or you can even just cut out this bit here and realize that you are not cut out to be a performance business operator. And that's what I've done myself. I am the world's worst business owner. These days, I'm lazy. I don't like doing stuff. I like to delegate. Sometimes I delegate where, in fact, in reality, I'm abdicating to my team. And so you can actually just then go, actually, I like doing startups and getting a business to 10, 20 grand a month profit, try and automate it and get it running autonomously as best as you can, and just do lots of smaller businesses. So, and this is the easier way of life, I personally find. And then that led me to my sort of stance on these three groups. So you have some businesses, a business or a bunch of businesses that pay your lifestyle. So they literally just pay your life, your bills, whatever. You'll most likely have a small salary, typically. You'll have some divvies, and that just pays your holidays, your toys, all that sort of stuff. And you may not even think of ever selling this business. So for me, and I've always said this, I don't hide anything. I am as easy to read as a Playboy magazine. Like, my lifestyle business is the realistic trader. And the reason being is that I'm going to be trading and investing till the day I die. And which means, I guess, if people are curious about me, I'm always going to have a small group of followers, very small. I'll never get this business to be big, because in order to have a big version of the realistic trader, you then become more corporate-y, and then you become more aloof, all that sort of stuff. You then have a growth business or something that you're aiming to sell. So I've got a bunch of these, and then I've got a bunch of companies where these are enablers. So we have a marketing company, an accounting firm, all that sort of stuff. And eventually, I want to have lots and lots of different businesses here. I want to have everything from medical companies to law firms to insolvency practitioners to tech companies, all stuff, because I know that I'm going to be in business till the day I die. And therefore, if I have a group of enabling businesses, when I go and acquire a new company, I can then parachute this business or this group into this target company to then pimp it out. So that is, wealth generation in a nutshell. So going backwards to point, God knows where, resilience, my lifestyle, that is what I'm doing. And it's already proof in the pudding, because I'm very paranoid with freaking everything. It got me to the point where the COVID lockdowns, although it really utterly killed some of my businesses, my personal income wasn't affected, because I had other businesses during lockdown that did all right. So it's sort of yin and yang, but I've resilience my life. And you can do the same with your trading. Now, another way to resilience your trading aspect of your life is to not have go basically all in on stuff. So if you have, let's say 10 grand is your life savings, don't put all of that at risk to the point where you lose an ETH trade or whatever, and then literally you've just lost 10 years worth of savings or 20 years worth of savings. You got to be a bit more. You got to be a bit more careful. Now, the other reason why some people may think I'm some sort of degenerate gambler, it's not that the case at all, because I have other businesses here and I've resilienced my life to a degree. Obviously, we can always be better and have more things, do more things, achieve more things, whatever. Because I have some businesses, let's draw another picture. Let's just say business. So business. One thing you could do is have some sort of positive flywheel. So any distributable cash flow, I then reinvest into the businesses. So that's what I call first order. Come on, pen. First order cash flow or profits, let's say, and then any second order profits, you can then, let's just say, invest. Now, because I'm always reinvesting the first golden egg from this goose, it's helping positive flywheel the business, right? And therefore, you will get spin-off cash flow. And it's that spin-off cash flow which I use to trade and invest, and hopefully grow that into a larger amount. And then if you're making profits here, you then just reinvest over here, or you can go and buy more businesses or whatever. And so because of this, what you should, and this is what you should aim to or aspire to have in your lifestyle. Obviously, scale is completely dependent on you, whether you're making an extra grand a month or an extra 10 grand a month. It's up to you to make that decision or work up to wherever you want to get to. But when you finally get this situation, you can then take bigger swings. Run out of room. Bigger swings, and you can take more swings. So what this means is that not only are you upping your scale, which is a massive thing in trading, you're also upping your frequency of swings. So, S. So what does this mean? If you have something which is upping the scale of your trading or your investments, and you have some sort of save level and restart level sort of facility, and you can increase the amount of times you swing at the market, guess what? Your hit rate becomes completely irrelevant. Because let's say you are the world's worst trader, and let's say you are a degenerate gambler, but you have this credit facility where you're constantly refreshing your account in some manner. Well, you could have a hit rate of 10%, and you swing, and all you need is that one hit to knock it out of the park. So that's why I really don't care if I, and by the way, I'm not a 10% hit rate person. I'm at least, typically, well, don't get, this is where you get confused between trading systems and investing, etc. My trading is only 30 to 50% accurate in terms of actual trades, but investments are 60 to 70%, etc. So this is where we get into the nuance of trading versus portfolio management, etc., etc. But this is the key thing. This goes back to the very first comment of why, despite losing a lot of money this year, I'm not really fussed, because of these first sort of four things. And that really gives you a form of nonchalance. And nonchalance is one of the most underspoken about traits that you need in trading. You need to be so nonchalant that you don't give a shit about your portfolio. And that's the only way you can operate. Because the moment you start putting emotions in your portfolio, game over. Now, moving on to point 5, people mistake my market/portfolio callousness with arrogant flippancy. And this is just wrong. I think the people that think I am arrogantly flippant are people that don't understand the context or my methods, or they're just a casual YouTuber and that they've seen one or two of my videos and gone, oh, this guy just doesn't care about money, blah blah blah. someone really had, or a few people really had a go at me online when I said that the FTX blowing up was actually one of the best things that could ever happen to crypto, because what it's going to do is accelerate the inevitable regulation of the industry, and it's that regulation which we need to get out of the way, and we need more companies to go bust a lot faster and get all this crap out of the way so that crypto can then flourish. Now, the reason people hate that is because those people that really tore into me probably lost their life savings with FTX or Luna or Celsius or BlockFi or whatever's going bust at the moment. I don't care. But yeah, I'm not arrogant or flippant. I'm simply cold and nonchalant. They're very different things. The key thing is that there's zero emotion, whereas arrogant and flippancy are sort of negative emotion mental states, if that makes sense. Number 6, people are putting too much bias and weight on recency. This is such a flawed thing. So there is I think it's shitty saying that you're only as good as your last trade, or you're only as good as your last swing or pot, depending on what sport you play or whatever. That is such a flawed mentality with trading, because what is trading? You can literally boil trading down into a couple of things. Trading, and it sounds a lot simpler than it is finding or carving out, because it is more of a carving out process / iterating out process, finding / carving out a positive expectancy system, or systems. Actually, you need systems. One system won't work in all market conditions. There are 6 market conditions. Watch previous YouTube videos, you'll see what I mean about that. And then flawlessly, key word there, flawlessly executing those systems in the correct market conditions. That is what trading is all about. You can literally boil everything into those 2 things: finding a positive expectancy system, and then flawlessly executing those systems in the correct market conditions, depending on whatever system it is. So if you have a trend trading system, you stop trading when the market is ranging. Now, the only way to gain or reach positive let's say you have a positive expectancy system. The only way you can then reach system expectancy is by placing every trade based on the system with no emotions, whether you've lost the last 10 trades or won the last 10 trades. You've got to flawlessly execute the system regardless of recency. So you mustn't put bias into recent events, recent trading performance. You have to execute the system, because and I've seen this time and time again, where I actually used to have a picture somewhere, I can't remember, where let's say I've been texting out some trades, let's say, and I have a 50% hit rate, and over a period of time I make make money. Okay, let's just say I make money. Okay, and then all of a sudden I get some people complaining that, oh my god, I've lost an absolute fortune from following you, Siam, blah 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 blah. That's because, one, I am trying my best to flawlessly execute a positive expectancy system, and they have not. And the reason being, even though let's say they're copying me word for word, but what always happens is, let's say I lose a couple of trades, and the person that copying me will also lose the trades. Now, they may even lose more money than I do, because they'll probably bet a bit, their risk management probably isn't as good. They'll probably bet a bit bigger. And then they'll go, oh, screw this, Simon's rubbish. I'm just going to, he can't, hit a barn door. So I'm just going to miss the next trade. But guess what happens? Boom, I get a trade. And they're like, oh, they're flat. They missed out. They just didn't do anything. And then I get another winning trade. Yay. And then, oh, shit, I missed out on that one. And then guess what? Oh, I'll copy Simon the next one. Oh, whoops, I lose the next trade. Boom, another big loss. And vice versa. And because they're not taking every trade, they're trying to pick stuff. After a bunch of trades, I'll end up with a 50% hit rate and happy as Larry. Whereas some people end up with, one winning trade or not a single winning trade, and then becoming the biggest Siam hater on the planet, saying Siam's a fraud, Siam's a con artist, blah, 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 blah. Or, they've copied it word for word, but because, let's say I'm using 0.25% max risk, and let's say they use 2.5% max risk because they want to make more money faster, I can lose 10 trades in a row and only be 2.5% down. Whereas if you lose 10 trades in a row at this rate of risk, you're 25% down. You've quartered your whole account. That is, more than a year's worth of work to recover. 2.5% is like a month's worth to recover. So, couple of things here. That's me going off on one, talking about trading, but it's worth talking about. So yeah, don't put too much weight or bias on recency. It is flawed from a statistics point of view with trading. 7, people mistaking fluidity with moving. You always move the goalpost, or you're a broken clock, Siam. I'm just going to pause the video and find a YouTube comment here because I think it's worth bringing up. Okay, so it's one of the latest videos I made yesterday.
I'm here. So
there is inbound. So I'm making this on the 13th of December. So this was on the 12th of December, 2022. So here we go. This is random user, and it's always a random user, always someone that hiding behind something. Anyway, AZ, you seem to constantly be stating the obvious that we're going into recession and prices will inevitably go lower. You imply a false narrative that everyone else thinks we're going to get a huge market reversal tomorrow. You also keep moving your goalposts for the timeline of a market bottom out every other week and keep lowering your eventual BTC low price prediction every month. Yes, one of the calls will eventually be spot on, but surely your audience can see through this. So this comment sort of made me write this bit here, mistaking fluidity with stuff. So I'm just going to read out what I said. So what did I say? 1, it's not stating the obvious because so many people are oblivious to it and also don't believe so. I'm talking here about market crashing. You're evidently in your own echo chamber of bearishness, hence can't or don't see other people's views. One must remain objective and always second guessing yourself. Okay, there are a lot of people that think the bottom is in, etc., etc., and you get that at every cycle or pivot low. 2, not a false narrative. You have a glimpse of crypto Twitter. Just have a glimpse of crypto Twitter and YouTube. Loads of people are bullish right now. All sorts of funny indicators to show bullishness. Many people are thinking quick Fed pivot will occur and it will send stocks and crypto flying. 3, not moving the goalpost. After the last big capitulation, I said end of November, early December, the next move would happen. Bear in mind, I said this whilst everyone was saying, way more lows, like straight away. They thought, it was going to keep on falling. No. And I kept saying many videos that, just after big moves, the market needs to have a break. There's always a consolidation after a big move. Still waiting to see the news fest repercussions this week. There's a lot of news coming out this week. 4, and yes, of course, you must always reevaluate your position and stance. You have to stay fluid. Only noobs put their stake in the ground and go, Bitcoin will go to this, I'll buy there no matter what, etc., etc. People said that 50k, 40k, 30k, 20k were lows. Like, people are always saying that. 5, many of my calls this year have been bang on, but you obviously haven't watched many of my videos or you're too blinkered with negativity, blah, blah, blah. Now, let's read the rest because, good things are said. For some reason, this person doesn't like me. But he says I'm correct. The user actually responded, sure, you do put some interesting content and I give you credit for it. This is nothing personal. Yeah, it's cool. I'm not taking it personally. And you're definitely one of the better content providers in the area. Thanks. However, you've missed my point and getting a little emotional. I'm not, honestly, I'm not. A simple observation of your stay fluid / move goalpost approach is a running theme. Yes, I agree, it's a strategy that inevitably leads to a bang on. Cool, but that's a very different thing. Just one recent example of your video on the 9th of November, minute blah 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 at 2.50, cycle low for the whole bear market this month. has again very subtly changed to, I said end of November, blah, blah, blah. This stance will inevitably change again as prices go lower into Q1, where it will eventually lead to a bang-on call. I get what you're saying. Yeah. As I said, and then I just said, I see where you're coming from. The takeaway learning point for me is to perhaps not use definitive words or sentences like, this will definitely happen on X date, etc. I guess we're agreeing to disagree on certain things here. Anyway, the point I'm trying to make here is you got to stay fluid, right? So I do trading pubs live sessions every Thursday, and many months ago I said, and I'll have to find it if I could be asked, this is when we're way up in the 30Ks, that when the market would move down, so if we pull something up, I said that Bitcoin, let's get rid of this comparison, let's open up any old Bitcoin chart. I said on its way down, it will eventually breach 20K, and it will use 16.5 as a sort of a consolidation post here. And that's exactly what's happened. In fact, there's no point talking about the past. Long story short, I've made, most of this year, I've made bang-on calls. Not me constantly moving the goalposts. I've been spot on, and the amount of messages and emails I get saying, "Oh, your call really helps," it is a lot, which is frustrating because I'll get back to how I've lost loads of money, even though I've been bang on a lot of things. I'll get on to it. 8, feedback systems. Okay, but before we get on to so let's talk about feedback systems first. So you have to understand the difference between fast and slow feedback systems in life in general, okay? So I've put here golf, snooker, chess and trading. So just for, I haven't played golf in years, but I used to play a lot of golf. I play a lot of snooker. I play chess every night, and also I trade, right? Now, those 4 things that I've put here are very, very fast feedback systems. To the point where if you make an error, you find out the repercussions of that straight away. You make a bad move at chess, you've lost a piece, you've lost your queen, or it's checkmate or whatever. Snooker, you make it, or golf. So I guess chess and trading are very fast feedback systems because you get punched in the face the second you slip up, right? Golf and snooker, a little bit more insidious. So if anyone that's played golf, you'll understand that golf is basically a series of tragedies obscured by the occasional miracle. Golf is a funny thing. So let's take a really bad one. So Siam is better at golf than Sam.com. I don't know if that website is still running. I'm just checking. No, it's gone. Oh, anyway, I had live footage of me being an idiot. So let's say you're playing golf, right? You're having a great round, and you shank it into the bushes. You're like, God damn it! And then because you're having such a good round, you're slightly overconfident, and you can see through the trees that I can actually do a tiger line straight through the trees, get it on the green, no problem at all. So you come in, whack, and you go ding, 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 and you've hit loads of trees, and let's say the ball goes back even further, and that's happened to me many times. So you're like, God damn it! And then what happens is, because you're still maybe living on an air of arrogance from your previous holes of being, doing really well, you're like, actually I've got another tiger line here, I can recover some of the lost distance. You do another bad shot, and all of a sudden you've gone from doing pars and birdies to, a mulligan. And you're getting 10 or 15, 20 shots on a hole or whatever. Now, if you have poor mental fragility, you're screwed for the rest of the game. Because what will happen, and it's happened to me in the past, I've had such a bad hole, it's really wound me up. I'm like, God damn it! And then you absolutely ruin the rest of your game, because the next hole, what do? Because you're now filled with negative feelings and emotions, you then make negative thoughts. Negative thoughts then lead into negative actions. So in the past, I've been really het up on a bad hole, and then the next hole, I get my driver out and I try and whack the bloody skin off the ball. And what happens when you try and put too much power in a drive? Literally fade it off into the right, and guess what? You're in the bushes again. And so one bad decision, in the previous hole will ruin a whole round of golf. It's the same with chess, snooker, everything. That's a very fast feedback system. A slightly slower feedback system is business, right? Like my mate, I think it was my mate that said this, or it was either me or my mate, I can't remember who came up with it. But we're like, wait a minute, Simon, you've just ruined your whole game, but based on one hole. Like, if you're being that mentally weak, what bad decisions am I making in business? As in, what is the golfing equivalent that you're doing in business? And I'm pretty sure most people are doing that. You're having a bad month, bad year, whatever. You'll make some piss poor decisions in business, and that will then spiral or domino into even bigger errors. And therefore, you'll then have your back against the wall. And you always make bad decisions when your back is against the wall. Trust me, I've made more failures than anyone I know, in business and in the market. A diet is a very slow feedback system. So, for example, I eat so much junk food, it's ridiculous. I'm living on the bad sort of false pretense that because I'm half Asian, I have a very fast metabolism, so I can get away with eating crap. But your diet and your health is a very slow feedback system. So I'm pretty sure in 5 or 10 years, this is going to catch up with me. The saying is, an apple a day keeps the doctor away. It's not a party sized bag of crisps a day keeps the doctor away. And yeah, literally, I'm eating a whole party sized bag of crisps every night at 1 a.m. at the moment whilst watching Netflix. It's not good. So yeah, you have to understand feedback systems, fast and slow. How are you actually, I promise you, everyone watching this video right now is screwing yourself over in some facet. Whether it's in your love life, your business, your trading, based on feedback systems and your poor mental fragility. How are you screwing yourself? How are you letting previous hiccups screw yourself up in the future? So, for example, I've put myself on a trading sin bin. So because I've already used up all of my year's risk allowance, as in in terms of risk allowance, you have like bowling lanes, right? But it's like an onion layered. Let's actually draw it. Let's go over to the left. So you'll have multiple onion layers of risk. And then you have something like this. Let's say you're doing 3 systems, right? So, and these are bowling lanes. So this will be let's say system 1, system 2, system 3. So in terms of your trading system, you'll have some risk management procedures here. So you will not break out of these lines. So each one like this. So if you're executing it flawlessly, you shouldn't exit those lines, which means the other bowling alleys won't be touched. But the thing is and I'll talk about the difference between pure trading and then crypto portfolio management. But what this means is you have these lines here saying, right, for your total trading, you shouldn't really ever deviate from this sort of bowling alley, okay, if you're careful. But also you have this outer sort of whole portfolio sort of bowling alley, which means that you shouldn't ever deviate outside of these things here. Now, because I have been a muppet over the last 3 months, really, I've already hit the far outer side of my portfolio risk management things. And therefore, because I've already used up my year's worth of risk, I've just banned myself from trading. I'm not trading for the rest of the year. One, because I know I'm chronically aware of fast and slow feedback systems and how if you have a very bad personal life, that is the first thing that will go to pot, as in your trading. And I'm not here to air my dirty laundry, but you would be surprised of the absolute cluster mess of a personal life I'm going in right now. Everything from my mum is dying to businesses are going to pot. At one point I had 3 court cases. I'm now down to 2, 1, down to 1 court case. And even 1 court case is mentally sapping, etc. And there's a lot more going on. Therefore, when your personal life is a mess, you need to stop trading. So that's why I'm personally sin binning myself from the markets. So let's get back to buyers mistaking fluent. Let's get feedback systems. Yep, talked about that. Now let's get into how the hell have I lost so much money if I've been in cash all year? So if you go back to my YouTube, etc., you'll see that I've been bearish on 2022 since last year. In fact, if you go far enough, don't know where it is. Yeah, if you go far enough, you'll see that I made a video called Beware of the January Shenanigans. And I was saying how, long story short, I effectively went all cash in February. And most of the year I've been in cash because I've been really damn bearish with crypto. And I've been shorting low risk, high probability moves. And like, even if you go to YouTube and type in Siam kid buy bit, I don't know, something like that. And like, where is it? This is 7 months ago.
Chop them up, etc.
And like, I've had absolute stellar things here. So even on this live video, that was $170,000 profit day. There was a period during summer where in the space of 6 weeks, I had 6 separate days where I made over 100 grand in a day, and 2 of the days I made 350 grand on a single day. So how have I lost so much money? Even when I've been bang on the calls, I've absolutely knocked it out of the park with some trading, some elements of good trading. What has actually happened? Now this actually comes into, so that question sort of blurs into this bit here. So, and I want to share, I'm trying to find something over on this other screen when I used to run a fund. So here we go. In 2015, I was an authorized representative, an AR, so an authorized representative, I can never say the word, representative of an FCA regulated Forex fund, so currency trading. So Forex Max was the FCA umbrella, and I was the trading manager of that particular fund. And it had a couple of million in, so it was a small fund. And anyway, it only ran for 11 months, and in that I grew it 61%, and then we stopped it in January. January time. So due to lots of different reasons. Now, this was a pure currency trading fund, right? So I was trading, the majors and minor pairs, euro dollar, cable, Aussie dollar, all those sorts of things. Now with currency trading like this, and it was a pure trading fund, I wasn't trying to accumulate anything. I wasn't trying to hoard up as much euros as possible or dollars, etc. It was pure trading. Therefore, I could apply pure trading principles. I was never risking any more than 0.25% max risk of the whole account per trade, had active trading stop losses, blah, 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 blah. And therefore, I had a good year. I had a load of bad months. Look at this, September onwards, I basically just bled money. But ended up 61% up. Now, so that is pure trading, and it's much easier. Now, when you're pure trading, you should not expect to make more than 10-20% in a year, okay? If you're doing 20% a year on a pure trading sort of account, you're doing really freaking well. If you do 10%, you're doing all right. Or really you should beat the S&P 500. So it should be benchmark plus. So if you can do benchmark and 6% or 10%, you're doing well. Now, that is with active trading. Where's my thingy? Trading. Now, portfolio management is a bit different, right? So you're doing a mix of the both. So let's say you have a crypto pot, right? You got a bunch of money, and I don't know, whatever. Now, you will be doing trading, you'll be trading, but also eventually when you think the bear market is near the lows, what are you going to do? You're then going to be in acquisition mode. Acquisition mode. Okay? So you're thinking, right, because you believe in the technology and you believe in whatever cycle, whatever theory you may have about crypto, and let's just say you're really confident that over the next 2 or 3 years it's going to be boom time, baby. What are you going to do? You're going to start trying to acquire tokens. Let's just say it's Bitcoin to be nice and simple. Now, you don't know where the bottom is. You absolutely don't. Now, if we get a chart open and and let's say you didn't have, some deep models or whatever. You don't know, let's say in this move from 69k down to 36, it's hitting a big support level, right? And there's many things that you could easily look at technical analysis and go, oh yeah, this is a massive support level, blah, blah. It's just going to hit this and bounce off, right? You don't know if 36, 35k is the absolute bottom. So some people could start pound cost averaging in there and thinking that's the bottom. But now this is why you have to be fluid, because you could easily convince yourself that this is the low, and quite rightly so, and there could be loads of indicators saying, yeah, this is definitely it. You can look at on-chain analytics and yeah, that would back it up, and you go, right, I'm going to start accumulating here. Now, if you're not fluid and you just sit tight, you could get absolutely wrecked. So what you do is you're in a constant token acquisition / sidestepping mode, if that makes sense. So plus sidestepping mode. So what you do, and by the way, this is the best way. I've studied the maths. I've done the maths. It is the best way to do it. But by attacking the model, the market this way, or using your portfolio with these models, you will bleed. Okay, you will bleed. So what happens is, let's say the market's falling. You think it's some sort of low, and then you start accumulating, right? And you get some tokens. Let's say you end up with, you start accumulating for a bit, and you end up with 10 tokens, 10 Bitcoin, right? Now, it could be the low, and then it goes wee, and then you're, a bloody god. But let's say you're wrong, and then because you're fluid with your analytics and whatnot, and you see that, oh, actually, this is not the low. There are other indicators, other things that mean we could see more falling. You're then you're going to sidestep, and when you're confident that there's more falling, what you do is you get the hell out of the market, and you go back to cash, let's say dollars or stable coin, whatever. And if you're correct, and it does start falling, great. Now, what will probably most likely happen first is that it'll start doing this, and it will invalidate whatever theory or technical analysis you had, and then you go, oh shit, I need to get out, right? So you then go to stablecoin. Now, so from a P&L perspective, so let's say this is profit in terms of dollars, and this is time over here. You're then going to take a dump, right? You're taking a haircut, but because you have a longer term thing and all you care about is token acquisition, tokens, that's what you want in the long run, you're not fussed. But from a dollar perspective, you've just taken a haircut. The market then falls, it does another big capitulation, and you're thinking, oh, this is the bottom now, right? So guess what you do? You're in token acquisition mode. You think, yeah, but at every little dump, there will always be a whole bunch, there will be an array of tools that you can use that will make you think this is the low. So what do? You do what you always do. You start buying, okay, or pound cost averaging and whatever. And you think, yeah, this is probably the low. Let's start acquiring just to be safe. But then what could happen is, the market sort of carries on falling. Let's get rid of this bottom axis here. Let's say your market model has been invalidated. Shit. But the thing is, down here, because you've got more the price has fallen, you'll have more Bitcoin. So here you would have accumulated, let's say, 13 Bitcoin, right? So although you've then taken more of a dive in terms of your pound or your dollar portfolio, you're slowly accruing more Bitcoin. Then it makes another dump. You start acquiring. Now you've managed to get like 15 Bitcoin. And let's say you're wrong again, and it dumps. You exit here. You're taking even more of a hit, and guess what? Market dumps. So for all you know, this could be 40k, 30k, 20k Bitcoin, 16k Bitcoin, or whatever. So what I will be doing, okay, is I'll personally be putting at least 70% of the pot. I don't know. I'm reassessing my model. For a long time, I've said I'll put 70% of my pot when Bitcoin hits 12, 13k, but I actually think it'll probably be a bit lower. But let's say we accumulate Bitcoin at 12, 13k. You're slowly growing. Let's say you've got 17 Bitcoin now, and let's say you're wrong. Let's say it does a spike low. You exit here. You then acquire over here, and I don't know, let's say you end up with 17 Bitcoin. Then eventually it's going to boom. But the thing is, what's happened if you were to look at your portfolio in terms of a dollar perspective, yeah, your portfolio will be 50% down, or 60% down in my case. But here's the but, which no one ever looks at. If you were to look at my portfolio right now in tokens over time, what do you think has happened? I've actually got more tokens. So if I were to buy into the market, I'm all in stablecoins right now. If I were to buy into the market right now at Bitcoin 17k, I will have more tokens right now, even though I'm 60% down in dollar terms. This is game changing, folks. You have to understand this. I do not give a shit about the dollar. I give a shit about Satoshis, right? So right now, I could just go all in on Bitcoin, be done with it, wash my hands, and go to sleep for a few years. And I have more tokens right now than when I did at 60k, 50, 40, whatever, even though I'm down in dollar denominated terms. So it looks ugly. So the average Joe on the internet goes, Siam, he tries to teach people how to trade and invest, yet he's 60% down. They don't understand I'm actually way up on the tokens. Way up. And I will continue to be in this token acquisition / sidestepping mode until I'm wrong. Until, and here's the risk. And there's a risk with every strategy you may have. There's always a risk. The risk here is this. Let's say the market goes down. You exit here. It's going down. And then the market does this. And you're sat in cash and the market is absolutely buggered off. Then you're in a whole world of pain. Guess what? This happened to me already. As in 2018. Sorry, 2019, this actually happened. Thing is, at the end of every bear market, you will always see volatility. You'll see a consolidation period. Just don't fret, because the market will come back to retest these lows or some of the middle lows. So eventually, it may take some months, but the market will have its a little peeky-boo down here, and then you can acquire in again. Again, you'll still have, instead of 17, you may have 15 Bitcoin. But guess what? You still end up with more Bitcoin than when you did at all-time highs or during the crash. Can you now start to see why I really don't give a shit that I'm about 50, 60% down? It's because of the tokens. I have more. I could literally YOLO in right now and have way more tokens. So in this case here, I've just made these random figures up here. Let's say you actually, by the end of this bear market, whenever it is next year, you've ended up with 5 extra Bitcoin. Now, let's say in the medium term, Bitcoin's going to go to at least, 150k Bitcoin. Or you can just do the maths, right? That extra 5 Bitcoin times 150k, you've actually made $750,000 of extra profit. Or if you're in the camp that you think Bitcoin will eventually be $1 million a coin, you've made an extra 5 million. So although I have some people upset with me at the moment because of this, I think they're massively forgetting the amount of tokens that they can now buy. And anyone that has followed me has done by default, whether they know it or not, done the the token acquisition mode plus sidestepping when we think we're towards the end of a bear market. Even though I've done this and bled and I've lost loads of trades. I had a bad ether trade, to be honest. I've had a few bad trades actually. And so yeah, my portfolio is down. Now, I'm not impressed when I say this, but although I'm 60% down, I'm a lot less down than hodlers. I'm a lot less down than anyone that's been in alts or whatever. Bitcoin right now is about 70, I think it's 76% down, right? So if you had just hodled Bitcoin, I've beaten you. I'm not proud of that because I'm still down. If you're in alts, most alts are 80 to 90% down. Again, I'm not impressed when I say that. I'm actually really pissed off with myself. So although I'm happy that I've got more tokens now, if I wanted to go back in, I'm still personally pissed off with this because I wanted to at the beginning of this year. I knew this we'd be in a bear market, and I should have executed better. So I've been bang on with the calls, piss poor with the execution. So what I wanted to do was be, you know, maybe 20% up in terms of dollar terms, and then be way more up in tokens. But hey ho, can't win them all. Trading portfolio, yes, that's that. Let's go back to these actual points. Yes, that's how I've lost money. The 3 C's, why you must always second guess yourself. I've sort of talked about that already. Coincidence versus correlation versus causation. I mentioned this in the video yesterday. I won't go talk long about this, but long story short, the US money supply is now falling for the first time in US history. Bitcoin has never seen a recession or a depression period, or a falling or a contraction in the currency supply ever. We don't know what happens. Also, if USM2 is going to fall and continue falling, a lot of billionaires around the world are all saying the same thing right now, that next year, so 2023, is going to be an absolute cluster mess. If the S&P 500 were to fall and break, go down here, in my opinion, there's no hope in hell that the S&P dumps and Bitcoin also doesn't dump. So I personally think, we've got more opportunities for more lows, which is why I'm now second guessing my 12 to 13k level. Because here's the thing, you want to constantly second guess yourself, but you also mustn't be greedy. So yeah, so that's that. And yeah, caution on entering the last stage of a bear market. Now I want to leave you, so I've sort of explained how I'm attacking the markets right now, but I want to leave you with a really good quote. And this quote was sent to me by a mate called Ryan, and it's from Paul Tudor Jones, one of the best traders in history. Right, I'm going to read it all because I want to end this video with this quote because it's that goddamn good. I see the younger generation hampered by the need to understand and rationalize why something should go up or down. Usually, by the time that becomes self-evident, the move is already over. When I got into the business, there was so little information on fundamentals, and what little information one could get was largely imperfect. We learned just to go with the chart. Why work when Mr. Market can do it for you? These days, there are many more deep intellectuals in the business, and that, coupled with the explosion of information on the internet, creates the illusion that there is an explanation for everything, and that the primary task is simply to find that explanation. As a result, technical analysis is at the bottom of the study list for many of the younger generation, particularly since the skill often requires them to close their eyes and just trust price action. The pain of gain is too overwhelming for us all to bear. Today, there are young men and women graduating from college who have a tremendous work ethic, but they get lost trying to understand the logic behind a whole variety of market moves. While I am a staunch advocate of higher education, there is no training, classroom or otherwise, that can prepare for trading the last third of a move, whether it's the end of a bull market or the end of a bear market. There's typically no logic to it. Irrationality reigns supreme, and no class can teach what to do during that brief, volatile reign. The only way to learn how to trade during that last exquisite third of a move is to do it, or more precisely, live it. A sort of baptism by fire. One has to experience both the elation and fear as markets move 5 and 6 standard deviations from conventional definitions of value. I cannot agree with this more. It's absolutely spot on. So I'm going to leave you with that. It's been one hell of a year. Lots of learning. I'm always learning, and so should you. I've been in the market, over 18 years. I'm still learning. So never lose that learning mindset. And I hope all these points, I've really tried to rattle through this as fast as I can. We've been here an hour. I hope it's been worth an hour. I believe it has. And I genuinely, from the bottom of my heart, wish you all the very best for the new year and the eventual bottoming of Bitcoin. And when I say that, I still maintain that although institutional money is coming in, this Bitcoin cycle will somewhat be relevant, and I think we've got further lows. We should see at least an 80% crash for Bitcoin, which puts us down around the 13k level. Right, see how this works. Yeah, there are so many learning points here. Heed as many of them as you can. Watch this video again in 3 months and see what else you learn, just like when you're watching a new movie. Right, toodles, have a good one. Bye-bye.